All right, ladies and gentlemen, I hope you had a wonderful day. Yesterday was absolutely insane, and today we got a little bit more of it. We had the same drop, or at least we gapped up pre-market, but then by the time we opened, it started to dump. You had the drop, you had the pop, but this time we sold it off, and now tomorrow you got the CPI in the morning. So we've been talking about it. I have a very simple breakdown, and I hate to break it to you, but this CPI is not important. I think it's fake. I think it's a lie, and obviously I'm not being that dramatic. What I'm telling you is that if you look at the option chain, it is pricing in less than 1%, and what I'm about to show you in this video is where the narrative is going. Once you see the same inflation charts, I think you're going to come to the same conclusion. Yes, we could get a reaction tomorrow. There will be a reaction tomorrow. We are even going to be there live 1 hour before the bell. So we'll see you there if you need any live assistance or help. But it could move the market. It will have a reaction, but when it's all said and done, market participants, the economists, everybody, they're looking for something specific that we're going to go over, and then you still got Jackson Hole, another non-farms, and then the next CPI. So this will be pivotal as far as the levels that we've talked about and where just everything has been at, and then coming into Powell in the end of the year, but don't get too jumpy. We've been talking about not panicking yet. I'm telling you, the level of tension over the last 2 weeks has been insane. And my thesis is that tomorrow will be an excuse to either buy the dip or to blow off top a little bit and get rid of some of the tension. And then we kind of reset into Powell and the next data. So Chad, got a simple breakdown. I got even more plays. I made a couple of plays after hours. So I got one play you don't know about yet. I'm going to share it with you. And then I also made another play on Disney. And then tomorrow we got Baba in the morning. And then it should start to smooth out. But we will see. So like the video, thumbs up, all that. I appreciate all of you. And thank you all for being so positive. You already know about the stream, hopefully. But now let's talk about the CPI. So like I'm saying, I hope we could even understand where I'm getting at with all of this. I'm coming from an angle where, yeah, we have reacted to a lot of economic data events, but I don't want people to get so jumpy and pile into plays when it's like, yeah, we're going to get volatility, but a lot of what I've heard over the last couple of weeks is very consistent. It's going to die or it's going to rally. There's a lot of strong emotions there. And like I'm saying, just be cautious. And sometimes this is why it's better to make a move after the data than before. Last year, we saw a lot of play the data right when it comes out, but I think you got a little bit of time here. But now as far as what is happening, you should know the basic breakdown. Core is expected to rise 0.2 month over month. That's the same amount that it rose last month. It's similar to headline, and core is expected to come in at 4.8. Headline is expected to come in at 3.3. So those are the basic numbers. Here's a little bit more of text that could help you out, but what this is saying, it's giving you the breakdown, the 0.2 increases, core CPI expected to increase as well. They mentioned something about base effects that we're going to talk about here, and then the big thing for this month around, this is going to relate into headline, is higher energy prices. Over the last couple of weeks, gas prices have gone up everywhere. Gasoline futures have went up. If people are starting to get nervous, are going to say this is going to be a big event tomorrow, the nervousness is coming from headline inflation and gasoline prices. Core, believe it or not, is not expected to do too much, but as you're seeing, core goods is once again expected to drive the disinflation narrative. That's what everybody has been highlighting. We even talked about it. You'll see that when we pull up the chart. And then again, the Manheim index earlier, decline in used prices and used vehicles and new vehicles. It's showing all of this disinflation trend. And then inflation as far as core services and real estate, it's actually not expected to move. So why I'm showing you this is analyst comments that are coming out before it, but these are very general. I would say this pretty much broadly explains everything. But if anything diverts notably from this, if the gasoline prices had a bigger effect, that would be negative. Again, if the car prices did not reflect the same, that would be negative, or maybe they drop even more. Again, depending on what core shelter does, that could change a lot about what everybody's thinking. So these will be the response mechanisms, but like I'm saying, I don't think we have to go too crazy unless there is a giant surprise. I'm thinking if it's not a move of 0.5 in any direction, core up or down, non-core headline up or down, I really think people will react, and then ultimately will fall in line with how we've kind of been playing out, and then start looking ahead for the next stuff. Now, the big thing, like we said, gasoline on inflation, and now core, even though it's expected to go up 0.2, this is where people are getting bullish. And let me show you base effects. It makes sense. Pretty much core shouldn't start, like in 2 months, core is going to drop rapidly because you're going against a 6.6% comp. So for July here in core, the comp is a lot lower. And this is why some people are worried. They're like, okay, it didn't start breaking out till 2 months later. So your base effects aren't as high, but you still borderline get to benefit from the base effects. But if you look at this chart, it is much different than the headline inflation chart, which, as you see, their base effects, the peak was this month. So headline, even though gas should be coming down, there is a strong baseline effect that's working against it. But this is also that disinflation narrative. It shows up in the charts. So it's really simple here. What is going to happen to core? They're going to have a little bit tougher of a time. Should be easy for headline. You got to deal with gas. Unless it's anything mind-blowing, it shouldn't move things too much. Now, the final thing I could give you is where the narrative goes forward from here. Why am I telling you that this really shouldn't matter? I'm glad the option chain supports my thinking with, again, it's like a 0.007 move or something like that. I keep clicking the wrong button, but I showed you this chart the other day. People are looking to see what happens with core. So if core heats up, or let's say core drops rapidly, but even if it heats up and we get surprise inflation, headline goes up, even core goods, you would think that would kill you. But at the same time, if it does come up a little bit from here, just like the last times, it took some months. Everyone, unless it rockets back above 6, everyone is going to say, well, wait till the next meeting and confirm that this one data set doesn't mean the trend is reigniting. Otherwise, if it does come down, that is what people will be focusing on, even if the gasoline stuff, because again, they're saying, well, that's why we look at core, because gasoline is volatile, you know what I'm saying? Okay. So that's where I'm at with all of it. It's just so easy to build a narrative around future data. And even when you look at the charts, again, if headline surprises to the upside, that'll get people worried alongside core, but it's all still manageable. And everyone's going to say, well, yeah, we're cautious, but wait for the next trend. And then we'll even see what Powell and everybody else has to say. So again, the guy who tells you it's going to be crazy, all of that, not expecting too much. But now, let us get into the plays. So I do actually have plays here. I made a couple. I grabbed Disney after the bell. The earnings came out, and again, they missed on a couple of things. They did good on a couple of things. They started popping when I think it was like the CFO started talking about operating margin on parks and saying it's going to be higher in the next quarter. They said they divested their DraftKings stake and went with Penn because it was an aggressive offer and they liked it, but they also did announce price hikes, but they also did bad in some areas too. Now, granted, they still make $22 billion in revenue, but we had this debate all day. We're like, is this going to move more than 2 standard deviations? Even though I had a pop and drop or drop and pop, I mean, it's still within everything. So we'll see the guide ups and guides down tomorrow, how people feel. I like it. I picked up 500 shares at 86.40. Remember, I sold out yesterday, took my small profits. Now I'm up. I'm up a decent amount on that, so even more than the pre-earnings play. So that's good. Gonna ride it out here. I think $92 is where I'm looking at. If it can't get above there, I think it'll have a difficult time and be slower. But if it rips through 92, we look in 95. And really, again, just take a look at last earnings. This happens a lot. So I'm not just speaking out of my a-hole right now. What I'm trying to tell you is, like, you see this a lot. companies will trade within the range of their last earnings, both where they reported prior to or where they ended as a result. So like I'm saying, these levels 92 and looking at 92 flat all the way to like 95, this is just from their last earnings where they did bad, they guided down, and they had a lot to prove. So hopefully you see where I'm getting at, riding out those shares. I really like that play, obviously, and we got it in the long term, but if it keeps going up, no more long term. You just got to sit in the chair, feet in the sand, bro. Anyways, but that's play number one. Play number two, KVUE. I grabbed 500 shares at $23.90, so a little bit higher than where it's at now. J&J even went up, but there was news that they will be indicated to be included in the S&P 500. The company that's replacing them, the S&P said they will not disclose that till they get closer till that day. So this could be good. My problem with these plays, I think Disney has post-earnings, and we'll see how it plays out. My problem with anything else, though, and even some of the plays I'm still holding, is tomorrow's CPI. It shouldn't have a big effect, but it's like, how is this going to get in the way? So I like these plays individually. They both have individual news, again, getting added to the S&P. I think it'll give it some hype, but just keep in mind, depending on the reaction tomorrow, whether it's nothing big or small, see how it affects that, and just keep in mind, whether it's a small cap, a biotech, something with very specific news, watch for those pockets to start performing. So keep your eyes out for that. That is play number two. Then finally, it's the same thing we did with Disney and a couple of other plays. Alibaba, like I'm telling you, they report tomorrow morning. I cut out my shares that I wrote. I made like $1,000 off of it. Remember, we bought it on the high, averaged down like right around here, then it rocketed up. We're out. I could have had a little bit more, could have also had a little bit less. I guess Goldilocks, I don't know. No, okay. But it took that profit, and then tomorrow, I think this is going to be a great play pre-market, depending on what happens. I said it today. I think their earnings are important, but like in a weird way, BABA has morphed into like a weird ETF that just represents China and like the social signals out of Xi Jinping in the crackdown, as weird as it sounds. So we'll see how it plays out, but I really like it. I think that's going to be exciting. There is still a couple of other post-earnings plays. You have like TTD. They went down. I thought their earnings was actually decent. Origin did good, and they destroyed it. Come on, Jay. Oh, this is what the? That's at 50? Oh my gosh. Oh my gosh, Jay, what the? Hold on, I might need to look into that one, but we're still in that one. We'll see how that. Damn, man, that was crazy. But then that will be a post-earnings play. I think that we got one more. There was Origin, TTD, and then good old Win. Shout out to Vegas, but they actually were up. They came down. I think they're even holding up a little bit, but I like these post-earnings plays. Otherwise, we're going to get the vibe from the market, CPI, go from there, and then hopefully we have some fun. But that is it, lady. And I covered my Amazon short, and I covered my box for a loss. Amazon $1,000 loss, box $100 loss, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, it's all about how you think. You need to start opening doors. Free yourself, my brother. It's very simple. There's many ways to look at it. Be creative. Get inspired, bro, because you can make money when things go down if other things go up. I want you to think different. The only way to make money going down, no. You can make money buying when things go down. It's vice versa too. Flip it up. It's not just one way. Everything you read here, everything, even here, everything financial is entertainment. I want you to understand that so you don't get too emotional. Stay in the game, and remember, a little piece of a big thing is way better than everything of something small, Chatadonia. So I hope you feel me. I hope you're ready. I will see you in the morning, Chatadonia. And it's game time. That's it. I ain't even awkward. I said champions, baby. What's up, Detroit? Come on. What's up, Midwest? Fight. They don't know, man. It's Friday Junior tomorrow. It feel like a Friday, but Chad, I love you. God bless you, and that's it. Horn, Mickey Mac. Oh, yeah. Okay, that was weird. Okay, bye. Okay. Yeah. What's happening? My hand's not on the camera. I forgot to hit the camera, but I started switching out. Usually I would have hit the button right now. Anyways, bye, Horn.